Hey everyone, Gary Jane here. Welcome back to the Ledger Labs podcast. So today we are diving into something that's been all over my LinkedIn feed, all over the accounting community. QuickBooks launched their AI assistant called Intuit Assist. And if you believe the marketing, it's going to revolutionize how small businesses do their books. But here's the thing. I've been in this industry long enough to know that when a software company says revolutionary, what they really mean is we added a feature that might work sometimes. So I brought in Jeffrey Rush today. Jeffrey runs a CAS firm. He's got about 50 clients on QuickBooks Online, and he's actually been testing this AI assistant with real clients for the last couple months. Jeffrey, thanks for coming on and giving us the real story, not the press release.
Yeah, thanks for having me, Gary. And you're right. There's a big gap between what Intuit's announcing at conferences and what's actually happening in my clients' QuickBooks files. So I'm happy to separate the hype from reality.
Perfect. Because I think a lot of CAS firm owners are wondering, is this going to put me out of business? Is this going to save me time? Or is this just another thing I have to clean up after? Let's figure it out. All right, so let's start with the basics. What exactly is Intuit Assist? Like, what does QuickBooks claim it does?
Okay, so Intuit Assist is QuickBooks' generative AI assistant that they rolled out broadly in November 2024. According to Intuit, it can do things like automatically turn emails into invoices, extract data from receipts, match bank transactions, send AI-drafted payment reminders. Basically, a lot of the manual bookkeeping tasks that eat up time.
So it's like having a junior bookkeeper built into QuickBooks.
That's how they're marketing it, yeah. They're positioning it as this done-for-you experience where the AI works in the background and then surfaces what it's done for you to review. They've even got this new business feed on the homepage that shows you all the invoices, bills, and reminders the AI has generated.
Okay, but that sounds almost too good to be true. What's the catch?
Well, that's exactly what we're going to unpack. Because yes, some of this stuff works, but there's a huge gap between it can do this and it does this reliably enough that you can trust it.
Okay, so walk me through what you've actually tested. Like, give me a real example of you or a client using this.
All right, so one of my clients, she runs a marketing consulting business, about $400K in revenue. She was super excited when she heard about the email to invoice feature. The idea is you forward an email from a client to QuickBooks, and the AI reads it and auto-generates an invoice with the services, the amounts, everything.
And did it work?
Sort of. Like, it created an invoice, but when we looked at it, the AI had pulled the wrong dollar amount, missed one of the services she mentioned, and set the payment terms to due on receipt when her standard terms are net 30. So yeah, it saved her maybe 3 minutes of data entry, but then she spent 5 minutes fixing it.
So it created more work than it saved.
In that case, yeah. Now, to be fair, the AI is supposed to get better over time as it learns your patterns. But right now, it's more like a helpful intern who's eager but makes a lot of mistakes. You still need to review everything carefully.
And if you're listening right now thinking, yeah, that sounds like most AI tools, you're not wrong. This is the pattern we are seeing across the board. AI can assist, but it can't replace human judgment. At least, not yet. Okay, Jeffrey, so that's one feature. What else have you tested?
The receipt capture and expense categorization is actually pretty solid. You take a photo of a receipt, upload it, and the AI pulls the vendor name, the amount, the date, and suggests a category. In my testing, it's been accurate maybe 80 to 85% of the time.
Okay, so that's better than the email to invoice thing.
Yeah, because receipt data is more structured. There's always a date, an amount, a vendor. The AI knows what to look for. But even then, 80% accuracy means 1 in 5 receipts needs manual correction. So you're not saving that much time.
What about the bank transaction matching? Because that's huge for bookkeepers, matching deposits and payments to invoices and bills.
That one's interesting. The AI is really good at matching when things are straightforward. Like, if a client pays an invoice via QuickBooks payments, the AI instantly matches the bank deposit to the invoice. Perfect. Done. But if it's a manual check or a wire transfer, or the amounts don't match exactly because of a discount, the AI struggles. It'll either not suggest a match or it'll suggest the wrong one.
So again, it works in the easy cases, but the complicated stuff, which is where you actually need help, it still requires human intervention.
Exactly. And that's the theme across all these features. The AI handles the simple, repetitive stuff reasonably well. But anything that requires judgment, context, or understanding of the client's specific business, you still need a human.
So if you're a CAS firm owner listening to this and you were worried that QuickBooks AI was going to replace you, you can breathe a little easier. This is an assistant, not a replacement. But we do need to talk about how it changes your service model, which we'll get into in a minute. All right, Jeffrey, so let's get into the stuff nobody's talking about. What are the actual problems you've run into with Intuit Assist that Intuit isn't mentioning in their marketing?
Oh man, where do I start? Okay, so the biggest issue, and this is critical, is that the AI doesn't understand your chart of accounts or your client's specific accounting policies.
What do you mean?
So let's say you have a construction client who tracks costs by job. They need every expense coded to a specific customer or project so they can see job profitability. The AI will categorize the expense. It'll say, this is materials or this is subcontractor labor, but it doesn't assign it to the right job. So you still have to go back and manually tag everything.
So it's doing half the work, but not the part that actually matters for your client's reporting.
Exactly. Or another example, I have a client who's a franchise owner. They have very specific accounting policies from the franchisor about how to classify certain expenses. The AI doesn't know those policies. It just uses generic categories. So we end up having to reclassify a bunch of stuff anyway.
Okay, so that's a customization issue. What else?
The AI-generated invoice reminders. Intuit's making a big deal about how the AI can draft personalized payment reminders, and apparently, businesses get paid 5 days faster when they use them.
Yeah, I saw that stat in their press release. Is it true?
Maybe? Here's the thing. Yes, the AI can draft a reminder, and it tries to personalize it based on your relationship with the customer. But the tone is often off. Like it'll be overly casual with a corporate client, or too formal with someone you've worked with for years. And if you don't review it before it sends, you can end up looking unprofessional.
So it's like letting your teenage nephew write your collection emails.
That's a perfect analogy. It's enthusiastic, but not always appropriate. And the worst part is, once the AI sends something, you can't take it back. So if it sends a weird or pushy reminder to a good client, you're dealing with that fallout.
That's actually a liability issue for CAS firms. Because if you're managing a client's books and the AI sends something that damages their relationship with their customer, who's responsible for that?
Exactly. And that's something Intuit's not addressing. They're just saying the AI does it for you, but they're not talking about accountability when it screws up.
So here's something to think about if you're a business owner using QuickBooks AI, or if you're an accountant advising clients. Just because the AI can do something doesn't mean you should let it. You still need to review everything before it goes out. Which kind of defeats the purpose of done-for-you automation, right?
Yeah, it's more like mostly done for you, but you better check it.
Not quite as catchy. Okay, so let's talk about the elephant in the room, cost. Is Intuit charging extra for this AI assistant, or is it included?
Right now, it's included at no additional cost for QuickBooks Online users in the US. But, and this is a big but, Intuit has said in their fine print that pricing is subject to change, and they can discontinue or charge for it at any time.
So they're giving it away for free during the beta period to get people hooked, and then they'll probably start charging for it later.
That's my assumption, yeah. And knowing Intuit's track record with pricing, it'll probably be an add-on that costs $30 or $50 a month per company, which, if it actually saved significant time, would be worth it. But right now, I'm not sure the value is there yet.
Okay, so we've talked about what doesn't work well. Let me ask you this, what does work well? Like what features are you actually using with clients and seeing real value from?
The transaction matching that I mentioned earlier, when it works, it's great. For clients who use QuickBooks Payments or Bill Pay, the AI matching is basically seamless. That probably saves me 30 to 40 minutes a month per client.
So if you've got 50 clients, that's what, 25 to 30 hours a month?
Yeah, roughly. And that's real-time savings. The receipt capture is also legitimately helpful for clients who generate a lot of receipts, contractors, consultants who travel. Even with the 15 to 20% error rate, it's still faster than manual entry.
So those are the wins. But it sounds like the more ambitious features, the ones that require understanding context and intent, those are still pretty rough.
Yeah, exactly. And I think that's where the hype is getting ahead of the reality. Intuit's marketing this as if the AI can replace a bookkeeper. But really, it's just speeding up certain data entry tasks. The strategic work, the judgment calls, the client communication, that still needs a human.
So if you're listening right now and you're worried that AI is going to replace accountants, I want to be really clear about this. AI is not replacing the profession. It's replacing certain tasks. And if your entire value proposition is data entry, then yeah, you need to evolve. But if you're providing strategic advice, tax planning, business consulting, AI is nowhere close to doing that. All right, Jeffrey, let's talk about what this means for CAS firms from a business model perspective. Because even if the AI isn't perfect, it's still changing the game. How should firms be thinking about this?
Yeah, this is the big question. Because I think a lot of firm owners are in denial right now. They're saying, well, the AI isn't that good, so I'll just ignore it. But that's the wrong approach.
What's the right approach?
The right approach is to accept that AI is going to keep getting better and start repositioning your services now. Because even if Intuit Assist is only saving 10 or 20 hours a month right now, 2 years from now it might be 40 or 50 hours. And if your service package is still based on charging for time, you're in trouble.
So you need to move to value-based pricing.
Absolutely. And more importantly, you need to move up the value chain. Stop selling, "We'll categorize your transactions and reconcile your bank account," and start selling, "We'll give you strategic financial insights and help you make better business decisions."
Give me a concrete example. How have you changed your service packages in response to this?
Okay, so we used to have a basic bookkeeping package, $400 a month. We handle all the data entry, reconciliation, monthly financials. That was our bread and butter. Now we're calling that AI-assisted bookkeeping, and we've dropped the price to $250.
You dropped the price?
Yep, because with the AI doing some of the work, we can deliver it cheaper. But here's the key. We're positioning it as the entry-level package. And then we're upselling clients to our strategic CFO advisory package at $800 a month, where we do monthly business reviews, cash flow forecasting, KPI tracking, tax planning. That's where the real value is, and that's where AI can't compete.
So you're using AI to make the commodity work cheaper and faster, and then using the time savings to deliver higher value services.
Exactly. And the clients love it because they're getting more for their money. Instead of just handing them a P&L every month, we're sitting down with them and saying, okay, here's what the numbers mean. Here's where you're bleeding cash. Here's how we can improve your margins. That's the stuff AI can't do.
Okay, but let me play devil's advocate for a second. What about firms that don't want to do advisory work? Like, what if you just want to be a bookkeeping firm?
Then you need to get really good at leveraging AI and offshore resources to maximize efficiency. Because if your only differentiator is, "We'll do your books," you're competing on price. And eventually, AI is going to undercut you. Or DIY-savvy business owners are just going to do it themselves with QuickBooks AI.
So it's adapt or die.
I wouldn't say die, but definitely adapt or become irrelevant. Look, there will always be businesses that need human bookkeepers, but the market for that is shrinking. The market for strategic financial advice? That's growing.
So if you're a CAS firm owner listening to this, the question you need to ask yourself is not, should I adopt AI? The question is, how do I position my firm to deliver value that AI can't? And for most firms, that means moving from transactional bookkeeping to strategic advisory. All right, Jeffrey, before we wrap up, I want to ask about client expectations. Because when clients see that QuickBooks has this AI assistant, are they starting to ask, why am I paying you if the software can do it?
Oh yeah, we've gotten that question. And honestly, it's a fair question. The key is education. We tell clients, Yes, QuickBooks has AI features, and we're using those features to work more efficiently. But the AI is not a substitute for human expertise.
How do they respond to that?
Most of them get it once we explain. Like, I'll say, the AI can categorize your expenses, but it doesn't know your business strategy. It doesn't know that you're planning to open a second location next year, so we need to be building cash reserves. It doesn't know that you need to restructure your debt before Q2. That's the value of a human advisor. The AI gives us better tools, but we're still the ones driving the strategy.
So it's about framing AI as a tool that makes you better, not a replacement for you.
Exactly. And honestly, most clients appreciate that we're using modern tools. They don't want to pay for outdated manual processes. They want efficiency. But they also want a trusted advisor who knows their business.
Okay, last question. If you could give one piece of advice to a CAS firm owner who's trying to figure out how to respond to QuickBooks AI, what would it be?
Don't fight it. Don't ignore it, and don't panic. Instead, see it as an opportunity to level up your firm. Use the AI to automate the stuff that doesn't require your expertise, and focus your energy on the high-value work that only a human can do. Because at the end of the day, technology is just a tool. The firms that win are the ones that use tools effectively to deliver better outcomes for their clients.
That's perfect. Jeffrey, thanks so much for coming on and giving us the real story. I think you've given people a lot to think about.
Thanks for having me, Gary. This was fun.
All right, everyone. Here's what I want you to take away from this conversation. 1. QuickBooks AI Assistant is real, it's here, and it's going to keep getting better. 2. It's not replacing accountants, but it is changing what clients expect from us. And 3. The firms that will thrive in the next 5 years are the ones that embrace AI as a tool and use it to deliver higher value services. So if you're running a CAS firm, now's the time to start thinking about how you evolve your service model. Don't wait until the AI gets so good that you're scrambling to catch up. Be proactive. Position yourself as the strategic advisor, not just the data entry person. And if you're a business owner using QuickBooks, yes, the AI can help you. But don't fire your accountant thinking the software can replace them. Use the AI for what it's good at, automating routine tasks, but keep your trusted human advisor for strategy, tax planning, and business guidance. If you want to dive deeper into this topic, head over to theledgerlabs.com. We've got resources, guides, and we're always happy to talk through how AI is changing the accounting landscape. And if this episode was helpful, share it with another firm owner or business owner who's trying to make sense of all this AI stuff. Until next time, remember, AI is a tool, not a threat. The question isn't whether to use it, it's how to use it to deliver more value. See you next week. That's perfect. Jeffrey, thanks so much for coming on and giving us the real story. I think you've given people a lot to think about.